Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for the evening of Monday, and we're sitting here now on May 1st, 2023, and the time, 6:45 p.m. Missing one of my monitors over here, so it's going to be strange for me. If I'm working with two, I normally have 3-4 monitors going, and I can point around, and I'm not able to do that, so please excuse that. But I want to remind you a few things. Number one, you see a join button on the bottom if you're watching me on YouTube. Remember, you can click that and join me in my morning subscriber videos for ETFs in the stock market. There and the futures, everything's right there for you. I give you both the morning subscriber videos there. The other part that you can do is, remember, if you like these, give me the thumbs up. At any point, you can take advantage of our offerings by moving your cursor to the top up here. So, I didn't understand this morning the big rally that we had in the gold and the silver at all. I think I was doing an update at that hour, in fact, for you, and I had said, I don't get why this market's rallying. It doesn't make any sense. The silver got up nearly $1 higher, and within no time, it had given everything up. Copper was up at 1.12 cents, gave that up. So we had a burst of activity, and you can get those things in front of key central bank events, in front of the bank event, the First Republic. I don't know what people rallied on it for this morning. We already knew before the markets were going to open that JP Morgan had come in, and I don't know if the word rescued the day. Some people think it's the deal of a century. Other people think, okay, they're just big and they were able to get it. Over the weekend, people thought it was PNC that was going to get it, another regional bank. I even commented on that. I have the articles galore. Didn't work out that way. So how do you handle going into tonight? The RBA, the Reserve Bank of Australia, they're expected to pause, second time of a meeting in a row with no interest rate hike. We're expected to go up 25 basis points, at least 25 for the European Central Bank. Some are arguing 50 points. We will see what happens. Then the argument for all the naysayers, we're all getting through and done. Folks, you're not through and done until the data says you're through and done. And I realize how many people just keep going that you are so wrong, Ira, and okay. But the Fed has two mandates, two. And one's the full employment, get us close, and they've got that. The other's beating inflation, and they don't have that. Show me that it's on the trajectory. Don't show me the headline inflation, the low-hanging fruit. That can go from 9 to 5%. Show me the core inflation, which doesn't move quite that way. Show me the stickiness of rents. Show me all the other stickiness. Tell me gasoline prices are down, and they are. Are they down dramatically? Doesn't matter. They're not core. Got it? You got to understand what's the core number, what numbers you're throwing out. Shelter's a big number. Remember that. As we look at the gold market, you can see how it's staying right here over the 18-day average of closes, but you have very much this sideways action. That's hard to work with in any manner. Sorry I left that cursor up. I'm not going to change it right now because I'm having a hard enough time with only two monitors. As you can see, you've got a pattern of lower highs, basically lower lows or attempts at it, and what you're doing is staying under the 18-day average of closes. Now, I happen to be bullish this market long term because I think stagflation is very real and can be the next word that's going to come into our vocabulary. I do think the Fed's going to have real problems. I think inflation is going to be sticky. The labor market is staying strong, not running away. Wage demands, I don't think that employers are any longer saying, hey, I'll pay you more to get you. I think they've gone to where they're going to go, and people that lose one job come into the other. I'm just not hearing company after company raising rates anymore. I think that they've done it. Don't get me wrong. They're paying. They've upped the ante on benefits. They've done a number of things, so it is important to look at that. When we come in and we look together at the swing line, lower highs, lower lows, I said, staying under those averages. And the Bollinger Band's one of the downside targets. Now get there, I look for good support to show up. I'm not looking for a big decline in the gold market because you're oversold already. When we look at the gold silver, all you did is get a correction, carried back to the 18-day average and backed away. But look at this rally in silver. I couldn't write fast enough if I wanted to have sold silver for my clients and get out the update that it hit the Bollinger Band. Get out if you were long. I couldn't even put it out. I didn't have any reason for them to be long, by the way. That's how fast it hit it and how fast it all went away. Copper did the same. You rallied right up to the 18-day average. I'm sitting there going, this is a gift. If somebody's caught in this market, this is where you want to be coming out because this thing's got problems. And finally, the platinum, which lost the embedded reading, falls all the way back down and finally hits the 18-day average of closes. I had just talked about this over the past weekend, how this market was probably going to see that happen very quickly now. In the palladium, you're still leaking away. You could go down even further to the Bollinger Band, but you're already oversold, so I don't think you press it. And in the dollar, I'm going to look for the market to have big troubles at the upper Bollinger Band if it can get that high. Why? Again, the naysayers and the Fed doesn't want to go forever. The Fed realizes that the bank tightening standards are probably worth a half a basis point, 50 basis points, let's call it a half a point, 50 basis points on interest rates. They're going up another quarter. That's 75 basis points over the past, since the banking event began, beginning of the year. They will get to the point where a pause is in line. I don't know where that month is. I don't know if it's June, the one after that. We need to see weakening in economic data. Without it, be careful. What kicked part of the markets up today was the manufacturing PMI came in very, very strong. I want to remind you, one of the things I use in markets like this, for the in and out swings, that's what I was saying. I was looking at these markets, pivot point. I created a 3-part free video series to teach you how to do it. You probably have pivot points on your charts. You tie it together with slow stochastics. I teach you how to do it, how to read them, where they're going from there. For those of you that get my suite of charts, which is either on our charting software or in TradingView now. TradingView, we can give that to you. We instituted that over the weekend, so we are now up. But you have to come to us in order to get it. Then we turn it on from our website. You go into your TradingView and under your other studies, it's all of a sudden magically right there. You can write me at Epstein at Linn, Linn, LLC, if you want information on that, by the way. You can call my staff. They can give you the information at 866-973-2077. But to get the pivot points, go to our website, free offers, click up here. You'll see an icon. You can take it that way too. I'm Ira Epstein. You have yourselves a great day. I will talk to you all at the financial market update and see you first thing in the morning. Hopefully, I'll get a working monitor. I'll run to Costco tomorrow and pick one up. Take care.